Hello, Blaine. We've been talking a bit shortly before we actually began the podcast, but can you introduce yourself in like 30 seconds and tell us a bit more about Dry Run?
Sure. Yeah. So my name is Blaine Bertsch. I'm co-founder and CEO at DryRun. And DryRun is a cash management and financial modeling SaaS product that we've built. A lot of our market are the accounting professionals that are moving from traditional tax services to advisory. And they're using DryRun to offer those advisory services in a really efficient way and deliver some amazing deliverables to their clients so their clients understand their cash position and where they're headed.
So cash flow is super duper important in a business. For example, here, yes, I use QuickBooks, but I was curious as per why you wouldn't integrate directly with Square or Stripe, for example, which I both use.
It's something we've talked about. A lot of that data does end up in the accounting platform.
Okay.
And because our partners tend to be accountants, they make sure the books are up to date and have all the right data, and we pipe it in. A lot of the clients that we serve, even on the direct to business side, they tend to be over $1 million plus annual revenue and large transactions. That's we see that really commonly. So oftentimes they're still doing like checks, hundreds of thousands of dollars and tens of thousands of dollars, or they're doing, direct deposits and things like that. And they're trying to track, who owes them money from those invoices they've sent out, and which big bills do they have to pay and when. So that's kind of a lot of where we started. And now DryRun's evolving and serving a lot more business models. And so you mentioned like Stripe is one that we kind of have a little bit on our radar, and partly because we use Stripe internally, so it's nice to pull that data in rather than the deposit data, let's say. So
yeah, I use Stripe too, but Stripe is kind of tricky. On my side, I run an agency, and for many reasons, like Stripe decided that they ban agency accounts a lot. Why? Probably because the chargeback rate slash customers being angry and asking for a chargeback, and if it's more than like 1%, which is not a lot, by the way. So it's like I always like saying that in the population there's like 1 to 5% of loonies, right? And in agencies, if you deal with 100 clients, you'll encounter at least 1 to 5 which are loonies, and that will have chargeback. And just for that reason, it's really frustrating. But sometimes they suspend slash ban or accounts, while Square tends to be more liberal towards that. And it's too bad, because Stripe it's an amazing business. I tried their program recently, like on the 1% climate carbon footprint reduction program, which is that you give 1% of your revenue to basically this program, which invested back in the environment. But yeah, just on a little side note, so do you use only Stripe on your side? Is that like how you take your transaction on their website?
Yeah, that's how we take our transactions is via Stripe. But like even the way you're talking, like from a cash flow perspective, and even internally for us, it's more important for us to know when the cash is coming into our account, right? So the deposits are tracked in our QuickBooks account. We pull that data from QuickBooks. So even though money is floating in Stripe, we want to know when that cash is coming in, when it did come in, and predict kind of moving forward. So it's it just kind of does the transaction for us, but it's not, we don't actually do a lot of our metrics or tracking through that. In fact, internally we use ChartMogul for a lot of our metrics.
ChartMogul, I used to use Baremetrics a lot, and not to stick too much like on the Stripe hate here, as I don't like doing that too much, but it's related to cash flow. When they limit our account, they keep the cash away from us for 90 days. So imagine you just got transaction and they suspend your account for 90 days. So that's like 2, even 5K like gone, for 9 months. But anyway, ChartMogul, that's pretty good. And I'm thinking to resubscribe again to Baremetrics, which I really liked. Like I'm building the MRR in my business, and trying to reduce churn rates and all those beautiful startup metrics. I was quite interested in knowing, like, first, who are your core clients? You get a lot of agencies like mine, or do you typically deal with e-commerce, let's say?
No, agencies, any project-based business is very common for us. So we have a lot of creative agencies, engineering firms, a lot of construction companies, especially when they're large project-based construction companies, like they're the ones that have like a crane or something, it's like some big operational type thing.
Yeah.
We have a lot of those types of businesses, both in our direct to business channel and also via our CPA and accounting partners that are offering advisory services. Also very common where they're advising those types of clients and kind of keeping them up to date on where their cash flow is, who owes the money. Here's your action list for the week. Phone these guys up and make sure you're getting your cash in. Those sorts of things. So yeah, very, very common. It's before Dry Run, I had an agency. I started in '99.
Yeah.
My first creative agency, and that was where Dry Run really comes from, is because I went through the 2009 kind of recession.
Yeah.
And it was a big impact on our business. We had to suddenly really understand our cash flow, understand our sales pipeline. We had to move from government contracts over to all corporate. At that point, we were doing a lot of government contracts, a lot of things that businesses are facing now. There's a lot of big changes in the way they're going to operate, who they're going to sell to, how they're going to sell to them. And you need that information. You need that data. You need to know, like, where am I at? Where's my money at? Can I make payroll? And how long till we start getting paid for these jobs that we're starting, right?
Yeah, that's super important. So you had your own agency. Yeah, I saw that. I wasn't too sure that you led your own agency, but that's super interesting. What problem did you face in that specific time? Was it, for example, that you had problems meeting the payrolls? Because in an agency, I would guess it's around like 70-80% of expenses. Was that the core problem here? Because I guess we're also paying softwares, right? So what was the main problem regarding your cash flow at that time?
Yeah, like when the recession hit, like payroll was a big one, but we had just expanded our team. We had leased a massive new office, like huge, got like a couple of ping pong tables later because we had so much extra room. Because we were expanding, right? We were planning to grow. We had leased, my partner and I had leased new cars. We like that we were in such a growth stage, and then the recession hits. Suddenly you're going from, how do we grow? How do we bring on the right people, expand, get these new contracts, to suddenly contracts are slamming shut left and right. We don't want to lay anybody off. How are we going to survive? Right. That's that first step. And at that point, I just pulled out spreadsheets and tried to decode this entire thing. And then I was in spreadsheets for the next, probably 3 years till I sold the business. But I will say that information was so critical that we had a lot of, like, we changed our entire, the channels we were selling to, everything. But we barely had a speed bump. And I think our biggest year was already in 2011. Like, we were just right back and growing. But I'll say a lot of that was from bringing in a massive amount of discipline and knowing, how much does it cost for us to stay in business? How much money is coming in, making sure I have enough cash on hand. As we're landing new contracts, knowing exactly what I need meant that when I go in and I'm negotiating contracts, I'm not just signing a boilerplate contract. Like, I'm really conscious of the payment terms in the contract and how I make sure I have that cash coming in. And sometimes, is this a contract we even want? Because we have to make sure we have cash coming in the door. And then once we started to get that engine running, then then we had the discipline in our business. So it just carried on, and we knew, like, this is where we're going. This is how much cash we have to have. Then we had a very detailed sales pipeline. It wasn't a list of prospects anymore. It was the timing of when those deals could potentially close, how much money we would get up front, when we would be paid, the follow-on payments. When you start looking at that, and you have a bunch of jobs, they're all starting on different dates, they're all for different amounts, they all have different payment terms. It's a massive puzzle, but you have to know when that cash is coming in. So I would build these really elaborate spreadsheets. Well, now in dry run, it's just like, yeah, bing, there, kind of, there it is. There's my invoices. I talked with that guy. It's going to be late. Move it over here. It's just a lot simpler and a lot faster to manage that sort of complexity. So, and what we found is the bigger the business and the more you grow, the complexity gets just ramps up. And so that's what dry run's about, is how do we help you? You know, you got multi-location, multi-currency, all these really complicated issues. Yeah, we can help you with that. You're not running 10 different spreadsheets and you know, you have a big Frankenstein of data, right?
Is it QuickBooks or Baremetrics slash Chart Mogul doing cash flow projection?
They're really good at reporting. That's what they do, is they report penny perfect what's already happened.
Okay.
There's like QuickBooks has, how do you call it? It's they have a cash flow projection. It's this baby metrics kind of
Okay.
like it's a very, very simplistic.
Yeah.
It just, there's not much to it. Like it's useful, like in kind of as a snapshot, but when you want to graduate to something where you're going like, you know, we have hundreds of thousands of dollars in invoices floating around out there, you have to be tracking those transactions, and it's you have to have a much more sophisticated tool for that. And that's where dry run comes in. Like it can be used on, like we have customers that are very small businesses and they use this because it's they can build financial models and these what ifs and how do I do this. But we really kind of gain our stride as you start getting a little bit more complicated. You're getting over that 500,000, getting over $1 million, getting into multi-million. That's where we can really help.
It's super interesting. So I have the demo version for Peralta Industries in front of me, and I can directly see its relevance. You know, in my case, in agency's case, like I said, most of the expenses are related to payrolls, and you can be late on your payrolls, but you will have to suffer like performance from your team, right? Because when your team loses faith in you and the fact that you will pay them on time, I mean, they work less hard, they work less long. Because in the end, humans are motivated to, well, first work for money, and second, like this is trust. And if they don't trust you, I mean, everything kind of crumbles under, right?
Yeah, that's the one thing you never want to miss is payroll. And that's it's just such an important one. And that's what a lot of like service businesses are like you said, it can be 70-80% of your revenue or your expenses are payroll often. Like there's that's the big lion's share. And to keep that money coming through the door, to make sure you have that money on hand, and is so critical, right? And it, like I said, it gets complicated because it's not just simply who owes you money. It's, you know, what deals am I going to land? When is that money going? It's like a sausage factory, right? Like you have to keep it coming. You have to keep it coming. Yeah. You can't just look at that invoice you sent out either. You got to look at your sales pipeline and keep it really active and make sure that it's you've got that full 360 view of your business, right?
When talking about like, okay, so I see that there's a sales projection in dry run. For example, for that, I use HubSpot. Do you guys integrate with HubSpot, or would I have to enter everything manually in dry run to actually get a hold of that?
Yeah, we don't integrate with HubSpot. We integrate with Pipedrive for sales projections, which we actually use our sales team uses internally. Okay. We love Pipedrive, to be honest. We've considered integration with HubSpot. We you know, in Salesforce, we may do that in the future. It's you know, you can actually import data with a spreadsheet, or you can just add it in and you know, if you don't have 1,000 different deals going, you can add it into dry run, and in you know, in a couple of minutes, like you can get a lot of deals in there. It's really quick to add deals and start building up projections of not just when the deal will close, but when do I think I'm actually going to get paid, right? So there's a you know, dry run is simple, it's easy to get started with, but there's a lot of sophistication under the hood as you start going, well, I really need to figure this out or that. We've likely have some way to work that in and you know, deal with the you know, that specific issue. So
yeah. Let's talk a bit more about the interesting comment that you made on like the contracts, the terms and everything. As I like saying, like not all clients are good clients, right? So first you need to make sure that they have the money, not only for the first part of the contract, which may be a month or 3 months, but that they have money down the line, you know, and that once you meet their needs in the agreement, that they can actually resubscribe with you. How would you go with that? For you, is it only a part of a contract being well written, or is it also from being upfront with the client and screening that client in terms of sales to see like if she will resubscribe and actually contribute to your cash flow down the line?
Well, I wrote a, it's actually, if you guys need it, buzz me, let me know. We actually have a document somewhere on our website called 21 Tactics for Getting Paid Faster,
I'll check it.
that I wrote quite a while ago, just
Okay.
because this is such a chronic issue. There's a few tips that I use that, you know, especially when we were kind of during the recession, to make sure money was coming in. And for project-based businesses, like they almost always will do a phased approach, like, you know, hey, let's get paid in 3 sections, let's say. First of all, that's way better than do the whole thing and then get paid. I would never even do that. We would just wouldn't even sign a contract like that. But there's a few tactics we would always do. One is we would get money up front,
Okay.
definitely cover any hard costs. Number two, let's say you would normally do 3 phases. We would probably break it into 5 or 6 so that you're getting money more often.
Okay.
Number three, and this is a big one, is we didn't split them evenly.
Okay.
So let's say you go like, okay, 5 phases of 20% each. We would go, no, we're going to do, you know, 20, 35, 30, get that money up front. The last payment, the last invoice was tiny, like less than 5%.
Okay.
The reason being is we would make sure we got that second to last payment on delivery.
Okay.
And so if they were trying to hold out on you, they weren't holding out on 20, 25%, they're holding out on 5%.
That's very good.
But there, you know, then you're kind of going, the way I would sell it to the client is, look, we'll have this last payment of 5% just in case you have any, you know, corrections or fixes. And they go, oh, okay, that makes sense to them. You know, yeah, sure, we'll do that. For us, it was like awesome, because we're getting that bloody money in before we deliver. And if you're skittish at all, if a client is chronically late in paying in the process, then what you can do is say, look, pay this invoice of 25%. That's the second to last one. That's COD. Like, we'll deliver. You give me the check that day and I'll deliver it. Then you're maybe chasing them for 5%, but you're not delivering it and sitting there praying that they're going to pay you a large amount. So there's a few tactics. I got a bunch more we came up with that would really help on the way we would deal with those payment terms inside those contracts. But those are a few of the maybe a little bit more obvious ones, but boy, they make a huge difference to make sure that you're really keep staying on top of that and making sure that you're not like the one thing, like I said, never ever do, even if you get a little money up front, is let's do the entire job, then send them an invoice that's net 30 and hope we get paid. That's a way you can run your business into the ground, because you have a few clients that just decide to not pay you or pay you late and you're in trouble. So
what became different in terms of cash flow for business owners during the pandemic? What would be like 3 tips that you would recommend them for cash flow during the pandemic?
Oh boy, this is a tricky one, because the pandemic was a little bit bizarre and that it affected every sector, but completely differently. Yeah. So there's sectors where they started to grow really fast. And the problem was getting cash in to fuel their growth and make sure that they can expand their remote teams and all these other issues they have. So that was really tricky. So and then people they're not working in the office, right? So, we would always tell people, hey, if you're still not sending invoices electronically, like from QuickBooks Online, you got to start now. Your operations and your all of your like get into the cloud, get your accounting tools, your project management tools, everything. If you're not in the cloud already, which most are to some degree, get into the cloud, and then get those electronic payments, like you mentioned with Stripe and that. There's a lot of companies, if they've been around 15, 20 years, they may not have got those really in place, or they aren't really dedicated to them. You got to get away from the check is in the mail and make sure you're getting that money moving through. One of the other things we did see with a lot of different sectors, though, is it wasn't they would actually change the way they did their business. So we saw a lot of service companies would start to add products, and you could buy these little products online, or restaurants. Like restaurants would now, hey, we also have sales of these sauces and this and that we could also jam, sell, right? Jam, whatever. But then we also saw product companies that were selling the widgets and that would say, okay, now we're also going to do services. We're going to deliver them to you. We're going to do the workouts in the park. We're going whatever. We saw a lot of really innovative ways to make sure cash was coming in the door. A great example I like to give is there was a laser tag business in Edmonton here. They laser tag, and they would have kids in, and they also had these gaming rooms for gaming tournaments and things like that. Well, now it's shut down. You can't do that. But they have this massive space. So what they did is they were able to set it up so that they could bring a number of kids in, and they could do the remote learning from this area. So suddenly they can have cash flow coming in. They had to deal with all the cleaning issues and everything, but they could have money coming in because they basically were almost like a school type location. Yeah. But it allowed parents that still had to work out of house to be out of the house, right? So completely different business model, but it brought cash flow in during the pandemic. And make no mistake, like businesses now were reopening. This is a very difficult time for them. As soon as subsidies run out, there's a lot of businesses will be in a pinch because the subsidies will run out, but they're still waiting for this to come back in. And they've been bleeding a little bit of money every month, even with subsidies for months and months and months. This is going to be a really crucial time for them to make sure they're getting cash in the door. So unique challenges that we've never seen before, and will be, changing the way businesses do business for a long time.
Correct. Hey, 3 minutes left to this interview. I do have another Zoom call afterwards, so let's do a rapid fire of more personal questions that are more addressed to Blaine than to Dry Run. So let's start with your greatest loss / learning experience of 2021.
Well, the biggest one for us is we spend half the year down in the States away from the cold. Okay. And this was the first winter in about a decade we had to sit through, and it was cold. So that was a bit of a rough one, but
okay.
But it was fortunately not a bad loss. So greatest win, we expanded our team. Our direct to our sales to the CPA community have really been growing rapidly. That's been actually a big win for us, is on the business side, surprisingly. I guess you were asking personal. Well, we've been stuck in the basement for this long. So.
Personal is business for most of our entrepreneurs, so that's good.
Exactly, yeah.
Your top 3 most important values as an individual that time?
Oh, it's a good question. Trust. It's really important is having people that you trust. I guess just caring about people, no matter who they are, where they're from, what they do, everything. Having respect for people is really, really important. Number 3, I'll just stick with those are a good 2. I probably covered it.
They're good. So. They're quite good. How many hours do you sleep per night?
Oh boy, that depends on how, of course I try for the 7-8 hours, but as an entrepreneur, there's a lot of nights where it's probably 3 or 4. That's just
so
how
what
it goes.
Time do you get up usually?
Well, I get up at the, 7, like regular time. I keep a very regular schedule. I don't work late into the night. I keep a very disciplined, kind of 8 to 5 sort of work day, and I'm very efficient. Yeah. But it's hard to sleep. That's what I think a lot of entrepreneurs, even if I go to bed, at a reasonable time, it's hard to sleep.
I've got some tips for you I can share after the podcast. It's been one of my obsessions to sleep better and get to sleep quicker. So I'll share that
Yeah.
after. What does your diet look like? Anything special or classic diet?
I would say a classic diet. I do very much most of our cooking, and we try and eat fairly healthy. We like to stay active. I'm a little bit older than you, so we're trying to. But I will tell you on the weekends we cheat. It's either delivered or we're out somewhere. Fortunately, now we can go out somewhere. So
comfort food and stuff. Yeah, I'm in the same boat sometimes. I'll say sometimes. We're almost done here. I'm just gonna finish with like, what are interesting books that you're reading right now and that you would recommend to the audience?
There's actually one I'm going to recommend. Actually, I have it right beside me here.
Okay.
Measure What Matters by John Doerr. This was actually sent to me from one of my advisors.
Okay.
And we were working, Traction is another one I would highly recommend. We were using a lot of the Traction sort of metrics. Right? Yeah. It's terrific book. We implemented a lot of those, like the L10 meetings and things like that. But the Measure What Matters with the OKRs helped us really focus in on those objectives, key results. A terrific book. It's been just awesome for our team, especially a full remote team, making sure everyone's on the same page. So that's a terrific. And then third book, if you're struggling with your cash flow, this is my book.
I'll check this one out. I ordered a free sample on Amazon. So.
Oh, okay, terrific. It's just a very concrete especially for business owners. Like, here's how cash flow works and how you can manage it. And this, I did write that long before the pandemic, just coincidental. That's what it's called. So. Yeah.
Cool, man. We will surely read that. Well, Blaine, thank you for coming. We'll keep each other posted. I'll come back to you with the sleep hacks and hope you'll have a great rest of your day.
You too. Thanks so much.
Bye.